Weekly US jobless claims tomorrow, guys. The most important data point of the week. Guys, usually people don't pay too much attention to weekly jobless claims. If investors want information on how the US job market is doing, usually what they wait for is monthly non-farm payrolls data. That's like the official jobless data. Now that usually comes in the first week of every month. However, guys, things, as you all know, things are moving very, very quickly at the moment, okay? So in the last 2 weeks, really, the entire US economy has effectively gone on lockdown, just like it has here in Europe. And what that means is that investors, we don't really want to wait until the next non-farm payroll official jobs release, which by the way is next Friday. We want to get a more timely update on the state of the US jobs market. And the best way to get that is through weekly jobless claims data. Now, last week it spiked by only about 70,000 though, but that did show the initial effects of that fear and that lockdown creeping into the US economy. But this week it's expected to show absolute carnage in the US economy, okay? There's a very, very wide range of estimations going into this data tomorrow, ranging from a spike of about 800,000 jobless claims to 3 million jobless claims. Guys, these numbers are unprecedented. I have to emphasize that. In the past, like during the global financial crisis, I think the most that weekly jobless claims jumped by was about 600,000, or maybe that wasn't even the financial crisis, that was before. But this is going to be a record-setting data point tomorrow, guys. It could be in the millions of Americans now unemployed and now claiming benefits. Guys, how is the market going to react to this? Well, it's tough to say, but obviously, as usual with data, if the data is better than expected, that's probably going to be a boost to sentiment, okay? So imagine if this data comes out tomorrow and it's under 1 million, say it's 600, 700, 800,000. Obviously that's bad, but not as bad as some people feared. So you might see a bit of strength in risk assets basically on the back of that, because it shows the US economy is holding up a little bit better than expected. If it's bad, however, 2.5 million, 3 million, even more than 3 million new unemployed people, we could be in for a bit of a sell-off in risk assets, guys, because people will be thinking, oh my God, the US economy is just absolutely crumbling. Guys, we're going to be covering this tomorrow, especially for our members. Check us out at Freak Network, and that is it from me for now.